In our last video, we discussed chargeback. Now let's dive into another important topic that often gets overlooked, chargeback timeframes. It is crucial to understand that every carrier has different rules when it comes to chargebacks. Very few carriers follow a set standard when it comes to the chargeback period. So if you work for an IMO, whether you're captive or independent, it's essential to pay attention to the timeframes that they have in place. Here are some of the common timeframes that you might encounter. The 24-month period usually follows the GI, which is guaranteed issues, or IUL, and annuity. A lot of the reasons why they have a 24-month chargeback is because they're high risk. A lot of times GI policies are for people whose health do not qualify for day one coverage. And because of that, if the client dies within the first 2 years, you are subject to 100% chargeback. There are carriers and IMOs out there that also do 100% 12-month chargeback. Those are typically companies that are LOA. So what they'll do is, yes, they are getting an advance for the company, but they pay you either as earned or some type in advance. And if that policy drops between the 12th month, they will charge back 100% of the policy. I know, it's insane because they totally got paid, right? There's also 100% 24-month chargeback with annual premium above a max advance pay. There are certain annuities and IULs where the annual premium is going to be over $24,000, which is usually the cutoff. So if that policy falls off within 2 years, again, 100% charge back. Then there's 100% 6-month chargeback. Again, that's going to fall along the lines of LOA companies or GI products because those are higher risk products. They're going to want their money back because they didn't make any. And then, of course, there will always be as-earned chargebacks. So even if you decide to put yourself on as-earned, if a client decides to cancel within a cancelable window, let's just say the policy comes out on the 1st of the month and they canceled on the 2nd, they're going to get a refund for that premium. And if you're on the as-earned period where you're claiming months 10, 11, and 12, you're going to get a chargeback for that amount that they paid you in that as-earned policy. And this one doesn't get talked about enough. LOA chargebacks, where the carrier pays your IMO agency manager your upline and they have to pay you. Keep in mind that your IMO is acting as an entity. So even if you write one carrier without a negative balance, your positive commission will be paid out minus any chargebacks owed. Understand these are timeframes is crucial for scaling your business and knowing when certain advancements are no longer in the red. These are some of the common variations that you'll encounter. So it's important to be prepared. So whether you're working part-time or full-time, treating your business seriously is key.